The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone. Hi Patrick. How's everyone doing today? Dollar may attempt some type of comeback today. I want to show what I'm stalking here today that may set up for us. Get to my charts. Okay, so here's the dollar trying to come back. This is what I'm stalking now, the euro. You know, we all know that the euro was dragged up by the strength of the pound.
Good morning, Dale. Steve here.
I see my screen, yeah, I see. Thank you, Steve. Okay, so here's a 15-minute chart of the euro. I'm looking for one more high up here towards 740, 750. This was a long talked about target last week from the lows. I have one drive here. I have two drives here. I'd like to see one more push above this high. RSI stay under 70. Something that's backing me up from the F18 is a look from Grega on Euro USD is 4 hour. So he has it up here that it could have ended right here around the 107.20 or so level and looking for us to take this out. He's actually looking for a wave 3. Okay, so I'm just trying to finesse a better entry using the 15-minute chart. Give me a Y if you're with me on the analysis. Stalking shorts in Euro USD. Hi, Kevin Hardianto. Also, for those of you that feel like you missed the boat on Euro Pound, there was a harmonic pattern that came out on EG yesterday that showed a low coming in at 83. Okay, and that there would be a rally from 83. I believe it was a harmonic pattern by Nick. There was a macro 10 minutes ago. Let's see what it's saying. Okay, so this is showing the breakdown here, right here at the head and shoulders. We did spike down to 83 today. I'll show you the harmonic pattern here. So here's a harmonic by Nick. And we did get down to the 83. So be looking for amounts, which really should make the pound the preferred short. I just can't short the strength. The RSI pattern's just too strong for me. I'd rather short the weakness, like silver over gold the other day, although that's reversing today. So here's some looks from the F18. So if you feel like you missed the whole deal in Euro Pound, looking for recovery here from the 83 level. I don't know if they'll make it that convenient to get back towards the breakdown. And that's my view. So be patient because this harmonic is playing out and there should be an opportunity in the next several days to sell a rally instead of getting short in the hole. Everyone with me on that? Give me a Y. So really, if I think there's going to be a rally in the Euro Pound, my preferred long should be in the Euro, right? But I like this pattern that I'm getting here on the Euro, so let's see if it accommodates us with one more high. The other way to approach it is, as Blake says, you know, if you're not trying to be perfect, yes. But we could rally first, Jess. Yeah. From the 83 level. Okay. Yeah, Blake's targets, much lower targets. I'm just saying we have a harmonic down here. I would use it to cover shorts and look to recommit on a pop rather than getting long. Right? Everyone understand why I wouldn't want to get long even though it's completing a pattern here because of the longer term macro on it. Give me a Y if you're with me. So I'm going to be patient here and look for one more drive, maybe up towards 107.40. Here's the line. Something like this. Let's see if we could attack this 38 level right here. Sorry if I'm making you dizzy. Still getting used to these charts here. Anyway, you have the idea. So I want to look for one more pop up there. We have a great guest today, Peter Temple. I interviewed him when I was on FX Street. Anyone remember Peter Temple? This guy does such in-depth work. He flies to New York to read original manuscripts of the greats that are no longer on the planet, like Dewey. I'll ask him about it. 107.10 is your trigger. 107.10 is your trigger right here. So we do have some time. There hasn't been a lot of community participation. So this is what I'm looking to do. Like I said, you could have a toe in the water because there's no guarantee. This could be a 3 here, right? 1, 2, 3. I'm looking for one more push up to try it. But you could have a piece on, right? Small piece, and then if it heads up to 107.40, you put on the other piece. Everyone with me on that? That's why I really like scaling in. Trying to be perfect is usually the exception, not the rule. Okay. So anyone have any views they want to share after the wild week we had, basically table being the star of the week? Ariano saying 107.70 is 61.8. Okay. So I'll take a 7.5 sale, Ariano. Is that what you're looking for? Also, my call on silver was good yesterday, but my call on Canada wasn't. Looks like it's diverging, but the timing wasn't so good on it. Not sure what to do with Canada now. I think it rallied too far. I talked about protecting yourself with about 420 stops when we were looking at it at 370 or so. So was right for 200, wrong for 50 here. What's interesting in the precious metals today is the relative weakness is gold. Kind of like gold has been the leader, the way the pound has been the leader, and silver's been the laggard, the way euro's been the laggard. But silver's not doing anything right either, breaking this wedge. I still think there's a good chance for 1780 in the silver, back to this 200-day. Give me Y if you see it. CAD might stall here, Jack. Okay. Ardianto, Alexandros, how are you? You have any views on the Loonie or anything here, buddy? Alexandros is a professional, trades for a living. Good friend of mine from a few other spots I've been. Silver ABC takes us to 1960. Okay, on the daily, Dave, has that completed ABCD? A picture speaks 1,000 words. So we need the C and the D, or we're working on D here. So a picture speaks 1,000 words. If you put up a link, maybe FA has a look on that on the silver. Let's see what they're saying here. Okay, we just got a candlestick 15 hours ago. Let's see what they say. They have supported 1810 and 1796. See what the sticks are saying here. A bearish pin bar with a long lower wick was posted yesterday. This was following yesterday's bearish engulfing candle. So perhaps we do have this correction continuing. This is a daily. It's trying to hold here. And here's your 1960, your A, B, C, D. I wrote it. 1685. Okay, thank you. You have no big biases. Hi, Diego. How are you? Okay, here's something from Luca. He's already shorting Euro Kiwi. Luca's an excellent trader. He had very good teachers. Didn't you have good teachers? Who were your teachers, Luca? Okay. So Luca's using this rally here. It looks like a big trade too. Very nice look from Luca. I'll magnify it a little bit. There you go. So Luca's saying that we failed here from the 50% level at 152.89. And there's a big break coming back under the 150 handle. Thank you, Luca. $82.96. Okay. So if you want to participate in the community, you could show these looks. Maybe Alex has something. Jess, do you have any supply demand views on any instruments that we're looking at? Thank you, Luca. Here's a look from Alex, the Dixie. Chart not found. Let me try it again, Al. So I'm curious if you guys like the looks from the community too. I always love the interaction between the community. I know we have a whole arsenal of great traders here at FA, but the interaction and the sharing from the community. I'm having some trouble with this, Alex. I don't know why. Let me try this one.
What's happening, Dale?
How are you? How are you, Blake?
Good, just slow morning. Very, very slow morning.
Well, it was, an explosion of activity, a lot, after you have huge moves like this in the market, Blake, sometimes the market's in shock. It's like being in an auto wreck. Of course, for cable bulls, it was a great, it was a great auto wreck, because it was more like a trip to Disneyland. So that, you think that's part of it? The people, that participants are just trying to get their bearings after this huge move and cleaning out tons of shorts yesterday?
Yeah, and I think the euro move shocked a little bit of people. I think the euro moved, it got dragged up with the cable. So I think a lot of people are, looking at the euro going, oh, well, do I short it here because it really shouldn't be going up ahead of the elections, or does it continue to go higher because the dollar just comes under pressure because of the cable? So because it literally got dragged up, and so because of that, I think you've got like a very stunned market. You're right, it's consolidating. The pound still looks very well bid. The euro dollar is just, it's in a 30 pip trading range, so there's not a lot to do at this moment. And then we don't have.
What's your bias on euro? Greg has got a nice wave count pattern, calling this at 2.
Okay.
And looking for decline, pretty good decline. I mean, if 2 is completing, 3 is the money wave, right? Because it's normally the fib extension of 1.
So in regards to the euro,
yeah.
I've got some short exposure from yesterday. And just because I'm short the euro pound, and I shorted some euro a little too early yesterday. I'm out of the money like 40 pips right now. But I don't mind being short. It's not, it's not something that's really worries me. I actually think it could go all the way up to 107.75.
Okay, 61.8 was mentioned by the community there.
Yep. Yeah. So I think it's possible. I don't know if we're going to make it all the way up there. Obviously being short, I hope we don't, but I'm prepared for it. And so, when you're like in a position, like it's probably a good opportunity to talk about being underwater. Like, and just so you know, I had my biggest day of the year was yesterday, because I was long so much cable, or pound rather, across the board. So yesterday was a really good day for me, so I don't mind being underwater a little bit. So there's a psychology alongside of that. When you have such a good day, you don't mind a little bit of give back. You have some room. I'm in a different position than somebody who, like, let's say, was stuck on the wrong side of the pound trades yesterday and got crushed, which I'm sure there was plenty. Okay. And if you got crushed yesterday, you're probably less lenient to let something go against you today. And so for me, I don't mind giving it a little wiggle, but always in my head, I know where it can go. So for example, the euro dollar, I think it can go to 107.70. Is it going to rattle me much? No, I've got enough of a position where I can actually add to it if I deem necessary, but I am prepared mentally for that type of move. And I think that's what a lot of traders, where they fall short as they're trading around the markets, is they don't think in their head, well, where can, this trade that's going against me, how far can it go? And if it goes there, am I willing to add to that position? Or what is my loss in that scenario, and is it going to hurt so bad that I can't be in it? And I think that's something that every trader needs to think about.
And would you carry the position into the elections, Blake? And is that what would hold you back from adding on at 61.8?
It depends.
Because of the red event.
Yeah, well, the French elections, going into the second round, you know, it really depends who makes it into the second round of the French elections, and that we won't know until this weekend. So until Sunday, right? So it depends where, like if the euro spiked up to 107.70, you got to think about the reasons too. I mean, what is the reason? Did one of the, like, oh, and by the way, I saw something really cool yesterday. Does like Mélenchon, you know, fall out of the race? If he does, then the euro is going to spike to 108. As you know, some of the potential for a populist type of movement in France is eliminated. So you got to think about the reasons why you got to move. But like if the euro just, because of dollar weakness, the euro just drifted up to 107.70 later today, and then, you know, started to come down, I'd hold it for a while. I don't, you know, you got to think about why it's doing what it's doing. You know, if it was more dollar oriented and not euro oriented, then yeah, I don't mind holding it. If it was, you know, it spiked up, the euro spiked up because of, you know, something that was happening in the elections, and that might change my tune a little bit. So you know, it's not a cut and dry answer, you know, and here's another thing, Dale, which I can take this opportunity to kind of talk about. You know, traders look at charts, especially a lot of your listeners, or, you know, and I say your listeners or people that are listening to this webinar in general, you know, a lot of traders just focus really on technicals. Oh, you know, it's all about the charts. It's all about price. It is, but you got to understand what's the driving force behind it. That's why you have to understand kind of on a macro level or fundamental reasons why something is doing what it's doing. So if you don't think about it, then if you don't think about why something's doing what it's doing, it's like you're trading blind somewhat, if that makes any sense to you.
Mm-hmm.
So, you know, and I've said this, you know, many a times to traders. I can teach anybody how to read charts. You can teach kids how to read charts. You know, if you see this, and this, it's going up. If you see this, and this, it's going down. Great. But if you remove the reasons why, you're only seeing part of the picture. And I think that's the problem with most traders, is they don't look at the reasons why and factor that into their charts as well. Charts will help you time an entry, but your overall bias or feeling of, you know, which direction you think the market is going should be more on from a fundamental or macro standpoint.
Okay, so all right, so let me ask you to comment on the desire of President Trump to have a weaker dollar. And every time he makes a comment, it is market moving for a day. Well, do you think he'll get his way if he keeps pounding the table for a weaker dollar? I mean, we've had a weak dollar really sideways to lower anyway since he was elected, so he seems to be getting his way. I actually think that the reason for a weaker dollar is actually the Fed raising rates, because higher rates slow down an economy and make the currency weaker and the economy weaker. So what's your view of the fundamentals for a long-term bear or bull market in the dollar, buddy?
Well, you know, first of all, you know, I think, you know, if you ask me, Donald Trump is trying to engineer a weaker dollar. He knows that, you know, the key to a, you know,
exports,
to a stronger manufacturing base in the U.S. is going to be through a weaker dollar. So, hold on one second.
Sure.
So
Thanks for that look, Alex. Go ahead.
So you know, I think he's going to try to get it personally. You know, I do. I think he's going to try to get it. Now, whether or not he you know, can do it, I think probably has more to do with, you know, who he puts in as Fed governors too, you know, and who he's appointing and whatnot. But you know, I think overall he's going to, you know, try to keep a weaker dollar policy, and I think Mnuchin is in line with what he's thinking. So, you know, I would not be surprised, Dale, if this is another year where we had one rate hike and that's it.
Okay.
Here, whether it's for
I have heard that.
yeah, whether it's for reasons of you know growth isn't strong enough, or you know the Fed wants to keep a lid on the dollar, or you know what I think is probably going to be more of the issue is we see a dramatic slowdown of activity from a consumer standpoint, from a manufacturing standpoint, through a productivity standpoint. I think GDP is going to slip, you know, from here, and so the Fed's going to be hard pressed to actually raise rates moving forward. I wouldn't be surprised if we squeeze out maybe one more rate hike this year and that's it. And that'll
it certainly is the most drawn out. It certainly is the most drawn out cycle I've ever seen.
Yeah,
a year between hikes. You know, in my career, I never saw that.
Yeah, I mean it's you know, you think back in the days of back when you know in the 90s, you know, rate hikes and cuts happened so frequently and so fast and so unexpected that you know there's a lot of movement there. So
and also, how about the signal you're getting from the long end of the bond market? You know, failing at 265 on the 10-year twice, and now taking out 2 1/4. So actually, the bond market yield curve flattening is saying that the Fed should not tighten anymore because the yield curve is rates are coming down because they fear economic weakness rather than economic growth.
Yeah, and I think that's a valid worry at this point. I think it is. So,
okay, buddy.
All right.
Thanks. So we have a day where, you know, not every day, Monday through Friday, is a great setup week to trade, is it?
No, I mean this is a you know like for like I took off half of my pound exposure yesterday, and I'm still holding, you know, half of it, and everything, you know, looks fine. The pound looks like it's consolidating. I had some orders. I still have an outstanding order to buy some cable on a dip below 128. You know, so if we get down there, you know, we start breaking below 128. I got some orders to buy some pound down there. I want to be a buyer of the cable. You know, obviously yesterday we got a little stretched, and for today it's a consolidation type of day. So you got to be prepared for those, and you know, and try not to get too terribly excited about what's happening and, oh, the pound's breaking down. No, it's not breaking down. It's, you know, just pulling back a little bit, and hopefully we get some better opportunities to pick some up at some cheaper prices. And I think you got to look at it that way. And so I expect some give back with I have expected and do expect some give back with some of my current positions that I have on, you know, after yesterday's move. So
you had a good month yesterday.
Yeah, I had a good month yesterday. Yes, I did. It was it definitely made my month already. So
you know, Blake, that reminds me, windfalls. I don't know if it ever happened to you early in your career, but
yes, it did.
It has happened to me. You get sloppy after windfalls because you say, "Oh, it's the house's money." It's not the house's money anymore. It's your money. Protect it like it's principal. Sometimes you get hubris when you're in the zone and you lose your discipline after a windfall.
Absolutely.
That's something. Go ahead. I just wanted, you know, remind people, and you know, I think a solution for that is that they pull some money out of their account, because, you know, it becomes real when you have to spend it. That's why when you go to Vegas, they give you chips for your currency, because it doesn't seem like real money. And in your commodity account or your FX account or your stock account, they're just digits too. But if you have to go out and spend $400 or $500, $1,000 in cash, and you lay it out, it feels real to you.
Yeah, always wise words, and those that, you know, that does happen. So, you know, and talking about a little bit of trader education here. You know, after a good run, like if I have a good run, I do tend to take a break, just as if I'm having a drawdown period, I'll take a break too. It's, you know, a lot of people just only do the drawdown periods. You know, oh, I've had, you know, 3 bad trades in a row, or 10 bad trades in a row, or you know, 10 bad or 3 bad days in a row. Whatever the case is, then people go, okay, now they're good at dropping the shovel. All right, I don't need to dig a deeper hole. But at the same time, you know, if you have a good run, I'm one of those people that I won't press it. I'll take a step back, reassess, because I do experience, like anybody else, a sense of hubris and, you know, want to be heroic in my trading. So
yeah, because, you know, I tell the story, Blake, that I had friends on the floor that would have 5-figure swings in the first 20 minutes, and we'd be hungry, and we'd go get breakfast, and we could have gone right downstairs with 20 below wind chill to Union Station and eat. Instead, we walked 6 blocks in 20 below wind chill because Lou Mitchell's had a breakfast deal. And then these guys that, you know, have $20,000, $30,000, $40,000 swings, we needed an accountant to divide up the check because it was real money. Yeah. In the morning, you know, in the morning, those swings in their account, it's not real. But when you have to dish it out, it's real.
Of course, so, absolutely.
You know,
one thing, and I know you got a lot of charts you're pulling up from people that are sharing their charts, and that's what ForexAnalytix community experience is. That's what the face experience is hey, share your charts. You guys gotta I'm going to show you something that you can do here for those of you that use here. Let me go ahead and I'm going to take over for just a minute.
Okay, buddy.
I want to show you a chart that I'm looking at. I picked up yesterday the US dollar Mexican peso. I bought it yesterday at 55 right here, and I sold it at 68 this morning. I've just bought it again at 70, and I'm buying it as it's trying to break out this little trend line now. I think the US dollar Mexican peso looks constructive to the upside, but
it just had that one more jiggle to the downside.
Yeah, let me share a little secret for those of you guys that want to trade. You want to share charts with Dale. Okay, so this is TradingView. TradingView is free. You can just go to tradingview.com. We use them for ForexAnalytix. If you notice, most of the charts that you see here are TradingView charts. You know, they're great company. You know, I've been using their charts for a while now, and the CEO Stan, he's a great guy, and you know it's just a really nice charts because they hold your trend lines and all your calculations and whatnot. Now if you want to share your chart with Dale, it's real simple. Okay, so down here at the very bottom there's a little camera. You click camera, right? And it says save image. So you get this link. You can grab it, or you can just click save image right here, and then just grab this link. Copy that, and then send that, and then put that in the chat box for Dale, and then that's an easy way for him to just grab that link. Grab that link and grab the chart. So it's just the little.
You're watching me. Yeah, you're watching me struggle with all the different brokers that they're using.
Right.
Okay.
You can do that. Another way you can do it too is you got this little snipping tool. For those of you that don't use TradingView, you can like let's say you're using a chart like this. Okay. So here's the pound. You got your snipping tool. For those of you that want to use Windows programs, just do a new snip. Just grab it, and then you have the snip. You can save it. Save it as a picture or whatever, and then upload it to Flickr or some sort of photo sharing platform, and then from there you can share it with Dale. But that's I'm just giving you guys some suggestions to make life a little easier around here, Dale. So how to use TradingView. Remember, it's just a little.
If I may intervene, also for MacBook users, Command-Shift-4 is an embedded like snipping function for MacBooks.
Okay, and there you go. So there's a suggestion just to help make you guys' life a little easier when you're trying to share charts, because everybody wants to see not only what Dale's views are, but what your views are, my views are, and this is about a community sharing ideas. And like I said, like I'm buying some US dollar Mexican peso here. You can see the reasons why I'm buying it, and I'm just again sharing my viewpoint on why I'm doing it. So and I urge you guys all to do that amongst each other. This way you guys are each other's eyes and ears. So Dale, thanks Steve for your comment. Dale, I'm going to pass it over to you because I'm sure you're going to take a break and then look at some of those charts. So I'm flipping it back over to you. So you got control now.
Thank you, Blake, and great review and good suggestion. And just want to show a couple of charts that the community has shared. And
awesome.
Here's a daily in USD CAD. Everyone see Alex's USD CAD here. So he's still looking for a pullback from here. Thank you, Alex. And the other day, I believe it was someone really paying attention to it's Vamsi. Am I saying your name correctly, Vamsi? Nice to meet you. Showed that it got to the level he was talking about yesterday for long-term longs in Aussie Kiwi. Thank you very much, my trading warrior brother Vamsi, for sharing that. And then we have a look in the dollar that I think is significant from Alex. Alex uses a lot of Japanese style work. He uses the clouds, the Tonkin, Ichimuchu. I used to play the Rolling Stone song for Alex. He's a professional trader. Don't fade Alex. His ideas are good. So here's your key point in the Dixie for the whole scenario is right here where you have the green uptrend line and you have, it looks like some type of pennant or triangle. And sometimes in Elliott terms, these are the fourth wave. Like they're saying also the S&Ps were in wave 4. I think Greg is saying that. A lot of Elliottians are saying that, which includes one more shot to the upside. And that would play out well. And if this happens, I do believe that we would see the euro under parity if we make new highs. I pronounced it correctly. Okay, Armand, how are you? Okay, Kimster, Kiwi Cat. I'm going to just, and Rick's here. Rick agrees with, why don't we just hold this back for a break and I'll start showing some other charts as well. I just want to take a quick break, and we're only about 20 minutes away from Peter Temple being here. Those of you that have been with me for a while, you've heard Peter Temple before. It's going to be a great interview. So I'm just going to show the phone app because there are a lot of people on the go that can't sit around at home, that may work, may have businesses that they run, may be like to go golfing and go to the beach and still be informed about what ForexAnalytix is thinking during the day when they're not sitting at their desk. So I think this is one of the better additions that Blake and Steve and Stelios put together, is to make this mobile and portable. So after this, I'll be back and we'll show a few more looks. I want to thank the guys that follow me around. Armand, great call on the guppy. Armand was right about the guppy and the pound, showed his black background chart last week. Everyone congratulate Armand. And I'll be back. Joan Montero, you sound familiar to me. Your name sounds familiar. I'll be back in a couple of minutes and we'll continue. Thank you everyone for your attention. I'm enjoying working with you. I hope you guys are enjoying your time here in FACE, ForexAnalytix Community Experience. And kind of like the Jimi Hendrix experience, only it's about trading, it's about our community, and also appreciate your contributions with your screenshots. I believe 1 + 1 = 11 in here. That's my math for FACE. See you in a couple minutes, my trading warrior brothers and sisters. And stick around for So nice looks. Everyone doing okay? Stick around for Peter. Love the video.
Hey,
But
Dale.
we need new ones. Kidney. Is that you, Steve?
Yes, that was me, mate. If you don't have something to plug in at the moment, I can show a couple of charts. Nothing spectacular.
Yeah, go ahead.
As you said, the market is decently slow, and you know we've.
Well, you know, on days like this, Steve, is when we do our planning and have our technical levels already known, so we don't do impulse trading, right? The best way to avoid impulse trading is to plan your trades and then execute when it gets to the levels you're looking for. Like Hardiano brought up a level in euro that Blake confirmed, the 61.8. So this is a great time to show things that may not be actionable right now, but prepares people for executing when the market offers that opportunity. So I've made you the presenter, buddy.
Absolutely.
Here you go.
Right. Let me see. Okay, tell me when you can see my screen.
Got it.
Okay, good. This is Usdchf, and
You're a little quiet. Can you turn your volume up or speak a little louder, please?
Yes, I'm going to try speaking a little bit louder. Probably.
Okay, better.
Okay.
Better.
Okay, great. This is Usdchf, and this is Euro USD. The reason I'm showing those two is the following. For me, there is nothing really. I mean, I'm not a scalper, as Stelios isn't a scalper, as he mentioned yesterday. I'm just showing a bigger picture of what we're seeing here in euro. I'm in a huge range. We had a false breakdown. We are currently, my main hypothesis is that we're currently within a triangle. You can see the resistance here. You can see the support here. Both lines, actually, as Blake is often saying. You can see the resistance here. You can see the support here, right?
And now we're right in the middle. We're right in the middle of it.
Yes, exactly. And currently we're right in the middle of it. Exactly. So
Your bias, Steve?
You know something, Dale? Fundamentally speaking, I think that sooner or later the euro is going to strongly rebound against the USD. The thing is that doesn't mean that the timing is now. The reason I cannot answer further, and I need because I need more input to give you a better timing, is because we still have a lot of question marks having to do with what Trump is going to do with his economic policies and how much longer the market is going to be buying that some of them are actually going to bring real growth to the US economy. Also, what happens to the Eurozone from this point on? The French elections are a great milestone. Personally, I'm one of the people, by the way, that thought that Trump has a real chance. So I'm not an optimistic, in general. I'm not an optimist in general. I'm trying to be a realist. Realistically speaking, I believe that Le Pen has very, very low chances of winning the French elections. So it's not that I expect some kind of a huge event from the French elections, but still there are more milestones. I mean, for example, I'm personally more worried about Italy. We can have a conversation with Stelios another time because you have a guest in 10 minutes. But I think that Italy, it's something that people mostly don't mention. But Italy...
Yeah, a lot of their major banks are penny stocks now, right, Steve?
Yes, but that's not my only problem. From politics perspective, I think that Italy has much higher chances of actually upsetting the status quo in the European Union, in the Eurozone, but not yet. We will soon have elections, and Beppe Grillo has, decent to high chances, I mean, way more than Le Pen for sure, of coming in power. And he's the kind of guy that, has talked about referendums to, to switch back to the liretta, etc., etc., etc. But, it's not an issue that the Eurozone is facing currently. So, in general, though, if things move smoothly with the Eurozone, the economy seems to be rebounding. And I think that people probably underestimate the capabilities of the common currency. I think that it's not so much of a headwind like most people want to make it appear. But as I said, this is a fundamental conversation. I would gladly have it, let's say tomorrow or whichever day you have some free time with Stelios as well. But the point I wanted to make here is that personally, we're testing 50% FIB, by the way, both in the Euro-USD and the USDCHF. I see no interesting trade for me here. Of course, if I was a scalper or anything else, that would be a completely different story. Now, if we see a break of the triangles, that's also a different story. But what I wanted to show is actually Euro-Yen. Why is Euro-Yen more interesting? First of all, Euro-Yen rebounded almost to the pip from the 61.8% FIB. Okay, from the low that we had here in June 2016, to the high that we registered in the middle of December. So this is an interesting rebound. We also just penetrated, a soft resistance zone, previous highs, etc. And this is following 14 consecutive lower closes. I mean, this is something that you don't obviously see very often. And usually I explain to people that when you see like a lot of bearish action or a very strong bullish action, that usually is an indicator that something is bearish or bullish and not trying to fade it. But that doesn't mean that we cannot rebound further. And to be honest, the next resistance zone is between, let's say, 117.80 and 118, which we find the 200 DMA and a previous low from here. So I think that Euro-Yen has the opportunity to rebound further. Now, if the risk reward is here now, I'm not very sure about it, but I can tell you that's why we use very often in ForexAnalytix candlesticks as triggers, because this candle here was a key reversal, and this was a very important candle actually. We registered a fresh low, in a very strong downtrend, and actually managed to close that day above the open of the day. So if somebody went long there, the risk reward was there. Now this is obviously still in a downtrend until we prove otherwise. So I'm just, showing that there is further possibility of a rebound. Now, as I said, this is a strong downtrend. I don't really know if the risk reward is there.
While you're on that chart, Steve, I just one thing I have noticed. If you come back to the Euro-Yen chart again,
yes.
If you look back to July of last year, you had nice divergences.
Oh yeah.
Whereas if you look at the the rebound that we had recently, look at that RSI reading. That's what, even though a lot of guys were looking, see that RSI reading, what is it, 20 from the low we had Monday. The low we had Monday. Yeah.
17.5 roughly, let's say.
Yeah. So that's a lot of downside momentum. And, it doesn't always work, but I have seen that the probability of markets bottoming after a low is confirmed. This is a daily, right?
Yes, this is a daily chart.
I would prefer to see a rally and then another marginal new price low with an RSI reading above 30 instead of at 17.
Yes, it's exactly more or less what we saw here when we formed the bottom.
Right.
Yes, I totally agree with you. I totally agree with you.
Yeah, so it had some work. This was just like, something falling off the ledge and bouncing off the bottom. There's some guys that have been trading with me for a long time that were waiting for 115. I know Hardiano has sharply higher things, higher targets, but that RSI reading bothers me.
No, I
tells me
agree.
that
Usually
we
when you
might
have
be-
overbought or oversold levels, that can be, that can be one of the contributing factors that can tell you, yes, a rebound might be coming, because as I said before, we had 14, if I remember right, consecutive down days. Obviously,
Right.
after 14 consecutive down days and an RSI reading that has cratered, yes, you should expect some kind of a rebound. But usually oversold and overbought levels are an indication of where the trend is. So yes,
Right.
if you are a short-term trader trying to fade such events, it's a good idea if you know how to manage your risk reward. But in general, it means that you should look into opportunities to realign yourself with the general trend. Of course, somebody can claim here that we had an oversold reading up here and an overbought reading up here and an oversold reading down here. So which is the trend currently?
Right.
Because we had a huge descending channel which we broke off from. And actually, now that we mentioned it, if
Look
we
at that.
extend this, do you see it?
Nice line. Yeah, so we could retest it or even trade 114.
Exactly, and depends
maybe
on how you draw it, because it's such a long line that if I move it 1 pixel here, 1 pixel there, I can make it actually touch the low here. So somebody can easily claim here that, oh, the trend has changed. Why? Because we were in a descending channel, we broke above it, we almost came to retest it. At the same time, we retested a very critical fib, 61.8. And why not? We might take off from here. Sure, that is a possibility. And, in trading, everything is binary. Does that mean that you have to flip a coin and say, now I'm going to go long or now I'm going to go short? It's the same thing. Obviously not. Obviously not. That's why we're looking into triggers, into confluences. And that's why we're defining risk reward. If you can do those things properly, I know traders that their trading style is such, trying to catch big reversals, that they write roughly 25% of the time and they still make a lot of money. Because when you're looking, for example, it's not that I'm suggesting to somebody to follow this trading methodology, but if you're looking for a 10-to-1 risk reward and you're 1 out of 4 times right, you're still making a lot of money. Right?
Right. Yes. Great presentation on that. Thank you, Steve. So we have Peter's going to be with us in about 3 minutes. If you could hand it over.
Yeah, sure.
We'll get this interview going, but nice views and nice analysis on the fly by showing that new new trend line that line that you
that's
came up
obviously a
with.
possibility. Yes.
Okay. So I just want to show thank you, Steve. Everyone thanks Steve. I just want to show one more chart. It's by Ronit, and Ronit's going to be our guest on Monday. He's the most bullish dollar bull I've met on Twitter. Here's his look on the crude oil. Oh, that didn't work. Okay. So that chart didn't work. The link you gave me didn't work. So I'm just going to move on to Peter. Face and Mark is live at the same time. What do you do? What do you do? You tape Mark's and you stay live here for Peter Temple, in my extremely accurate and humble opinion. Hello, Peter. How are you? Thank you so much for taking time out of your day to be with us. I'm really looking forward to hearing and seeing your views, and I'm making you the presenter right now, buddy. So like the old TV show, The Outer Limits.
Okay, can you hear me?
Can hear you, Peter. So like remember that TV show, The Outer Limits, where you were sitting in front of the TV and it said that they now had control over your TV?
Okay, and, so Dale, I'll agree I'm old, but you didn't have to point it out that way.
Well, we were just children when that was running, right, buddy? So yeah. I'd like to introduce you to the community, Peter. You're one of the most, intense students of market history that I've ever interviewed or talked to. You know, Peter will send me an email. He's flying to New York to read the original manuscripts. Who do you go see? Who's the dead guy you went to read in New York, Peter?
Dr. Raymond Wheeler.
Okay, Wheeler, right. And I read Peter's stuff, and right now, Peter, my pineal gland is pretty aggressive right now. I don't know if it has to do with the solar activity lessening or not, but you know, every time I read you, I go, wow, you know, this guy is really a student of everything. So thanks so much for taking time out and joining us today. And I know you're talking about your look here in the S&P is that we're in a wave 4. And why don't you just take it away and tell us what you're seeing and what you're expecting. I know what you're expecting long term, but the idea is to survive the short term so you could be there for the long term.
Right, and yeah, that's the big question, because the market's right now, today, a little bit all over the place, but it is going to be because we're in a triangle at the moment. So, you know, you said to me, you know, I can talk about anything. I was sitting last night just kind of thinking about the S&P 500 and how it relates to the dollar and the euro, and measuring the lengths of the waves in terms of time. And I think the bigger picture, and maybe I should start there.
This is what you talk about quite often as well. It's all one market.
It's all one market. Everything, and even gold and silver now are starting to move with the U.S. market. It's really quite extraordinary. But, you know, Robert Prechter came up with this years ago in his book. And he talked about at some point when we get very close to the top, everything's going to start moving together. So I see the U.S. indices, and of course you can go across the pond and you can see that the DAX and the AEX and all of these are topping out at the same time as the U.S. market is. But I'm seeing the euro, I'm seeing the currency pairs, the U.S. dollar currency pairs moving with the U.S. market now. And it's all the deleveraging that's going on, and we're getting very close to a top, and the whole world is moving as one. And as we reach the top, and I'm going to talk about, I thought I'd talk about that today to give you an idea of how I see these things aligning. But as we get...
So basically you're looking like the cable has taken the lead against, you know, the dollar weakness. You're looking for the euro to do the same. Basically, dollar weakness with the blow off and the S&Ps to complete.
Yeah. So here's, for example, the dollar. This is a daily of the dollar. Okay. So this kind of sets it up, and the long range. I mean, if I back this out, my numbers are going to move around on the screen. But here's our dollar, and it had a great big sort of. This is all corrective to my eyes, but it had a 5 waver all the way up to January the 3rd here. And I really want to talk about what's happening in this area here, because we are heading back down to 92 in this area. And I just wanted to talk a little bit about the timing there, because that aligns with what's happening with the euro, of course. It's the exact opposite chart. And right. So what is happening with this, and from an Elliott wave, I'm strictly Elliott wave with cycles in the background. And so if I look at this chart, very early on, I call this as being a corrective wave because it's 3 waves up, and you see an A, B, C here, and this wave here from an Elliott wave perspective does not have 5 waves. It has 3. So this told me that this entire wave was going to retrace right to the bottom at some point, and it has been doing this. So I called the top, and now we've got a first wave down, second wave, and we're working our way down to this previous low. This bottom here, which is a 4th wave, started, or rather turned at May the 3rd, 2016. And then we had a top January 3rd. Well, that's almost exactly 8 months. Well, it is exactly 8 months, which is pretty amazing. So if I measure this and I say, well, it should retrace from an Elliott wave perspective in somewhat the same length of time. So that takes us 8 months, takes us to September the 3rd. And that is my sort of take on the dollar. That's where I believe we're going. And I also think this is going to be the top of the U.S. market. And I'm going to get to that shortly. But if I go then over to the euro, and I'll do the same thing, a daily chart of the euro, here it is. It's almost a complete mirror image, and you can see that yes, we were in a triangle, but we've broken out of that triangle with the election here. That's good old Donald Trump right there. That spiked down. And we've come down in 3 waves. It's an A, B, C, and 3 waves. And in fact, you can go right back down to here, and you can see I've got this as an A, B, C, which is 3 waves, and that will retrace. So my target is 1.16. I noticed you mentioned 1.15 a little bit earlier. So I have the euro retracing because of 3 waves, just like the dollar in the opposite direction. And I believe we're going to hit 1.16 up here, and we are going to turn down and have the mother of all 5th waves.
Interesting.
Okay, so those 2 align. So now we go over to the S&P 500. I just got to figure out where I hid this chart. Here we go. So here's a daily chart of the S&P 500, and here's our 4th wave down here, and we're in this 5th wave, which lo and behold, and not very many people have it labeled this way, is a corrective wave. It is what we call a zigzag. So it had 5 waves up here, an A, B, and we're working on our 2nd set of 5 waves. The zigzag is 5 waves, 3 waves down, and then another 5 waves. And this
is this the ending diagonal pattern that you're talking about that started from where we have 1 and 2 labeled and will complete at new highs up there? That's going to be the ending diagonal?
Well, it's not an ending diagonal. It's which is an Elliott wave pattern. It's really a wedge, which is just a technical analysis pattern.
Because I know for a while you were looking for an ending diagonal, and there were actually some Elliotticians that said at the end of 3 that you have labeled there was an ending diagonal.
No, because the 4th wave has to overlap the 1st wave. Here's our 1st wave. The 4th wave would have to come all the way down here, and it's not. We're in a triangle right now, and because this is corrective, normally the 4th wave would retrace 38%, but because this is all corrective, there are no rules. It's going to have 5 waves, but in terms of retraces, and I think this is what a lot of people are missing, it can do virtually anything at once. So we're in a 4th wave. I have this as a triangle that we're in, triangle pattern right here, and we are just about ready in the next couple of weeks to go into our blow-off 5th wave, which may be an ending diagonal because this whole thing is correct.
And that would take you out to September as well, above 2,500.
Well, yeah, because if I look at the ES, which is the same pattern here. Here's my A, B, and my 1, 2, 3, 4, and the 5. You can see how I've labeled this with, this is a combination wave in the 4th wave. We've actually got something called a flat here, and then we've gone into a triangle. And so the triangle should end in the next couple of weeks and head up. But if we look at the timing of this, wave 1 was 2 months in length, and it went up to just about this point here. And then we came down. I have this. I should move this over. But then we had an ABC down, and that took us 2 months as well. We had a 3rd wave up here, 5 months. We had a 4th wave. This is going to look like it at May the 1st, say 2 months. And so you're looking at a 5th wave. It should not be longer than the 3rd wave, but let's say that it went 5 months, or sorry, 4 months. That would take us to the beginning of September. So you're starting to see the U.S. market and the euro and the dollar pointing to the same place in terms of time, and also an end of their waves at the same time. So that's kind of what I'm looking at in terms of the market. Everything seems to be moving in that direction.
And I do remember last year, to your credit, once we took out, I believe it was 2070, you started talking about 2,400, 2,500. That was over a year ago, right? What would make you wrong on this scenario? Is there a price level, like a bull or bear line in the sand, that would tell you something else is happening and that the top might be in, even though I agree with you, it looks like, we had a confirmed high at the high, so another high is likely. And you say a wave 4 could do anything. Could wave 4 retrace to 2,100?
Well, it could. Then you would have an ending diagonal if it did that, because we're waiting here at that point. It can't go past. If it went past the bottom of 2, then you would have to say, well, it's all over. But I have, and even going into the Elliott Wave Principle book, I've gone through all the charts in there and gone back and looked at them. I have never seen anywhere a truncation. Each one of the charts there that points to a truncation is incorrect. So Bob Prechter did a lot of those charts sort of in the middle of the market as it was moving. And some of them are second waves, and they're not truncations. So I do not believe in truncations. I've never seen anything that did not do 5 waves, unless it's a corrective wave. But this is a zigzag. It has to do one more 5th wave up. I don't, you know, but right. if you say what would be my bottom line that I would say something's wrong, well, obviously if it came down below 2080, 2078, 2080, somewhere in there. Okay,
and is that 2427 some type of fib extension? How did you come up with that number, that white horizontal line you have up there?
I don't know.
Okay.
I probably just moved it around, and I probably had it up. I think the top may be sort of 2500. Usually what I do is I take a fib off the A wave, and there's a couple of places you can do that. I can take it off this first wave, and it's sort of pointing to 2550, or I can take it off this A wave here, and it's pointing a little higher. I'm not sure we'll get to that, but I'm looking at around the 2500 range possibly. The other thing is that when you get, as you know, when you get into these toppings, typically the waves start to get a little more compressed, and so we may have a 5th wave that does not get as high as people think it's going to get. It may just compress a little bit and only go up to 2500.
You were right on gold last year, Peter, and then after this big pullback to 1120, I saw you positioning yourself there too. I think you're looking for, you know, something like 1600 on the gold, and would that be the September time frame too?
Sorry, on which?
On gold. Your timing, you know, and why has the gold been easier to forecast than the S&P? Do you think it has anything to do with central planning?
I think because it's gold moves a lot slower. I don't know. I don't find it any easier or any more difficult. I think gold is coming down. It certainly looks that way today. I was looking at it a little bit earlier, the subwaves. Silver certainly has. I think we're going to see a double bottom here on gold. Okay,
so there's going to be another opportunity to recommit going into the summer. Okay, that's a new look for me from you. Okay, I know you liked it down there at B at the beginning of the year, and I know you liked it at the end of the year of 2015, and you know that was a great call. And your overall look, I think there it is, your 1600 level that we pull back into June, and then we have C up to 1600, and then eventually you're thinking we go down to 750. Is my memory serving me correctly here?
That's correct, because this is an ABC correction. So you've got a big A wave down here. You're going to have a B wave up to the 62% level. It's about 1600. Okay. And then you're going to have a big C wave that should take us down to the previous 4th, which is 730.
So, there. You know, once we get towards the fall, Peter, it doesn't look like there's going to be much to be long except the dollar. And
gold, you'd want to be long gold, because I think that's the other reason I think that this is coming down just from a pure fundamentals perspective, is that or maybe
the market has another wave to the upside. Gold has another break.
That's right. The market is going to go to the upside and have its blow-off wave, and so that would tell me that gold is going to come down. And then when it reaches here, of course, the market will turn and gold will head up. And so that's what I see. And because a lot of these things end up being, we're going into deflation, and so the U.S. dollar going up is deflationary as it becomes valuable. And so I see gold will do the same thing. It will head up as well. So it'll go up into the nether regions here, and then people start to sell their gold at some point. You know, talking about fundamentals and what people do. Governments start selling, everybody starts selling as they have to pay off debts as the market comes down, and that's why you're seeing a great big C wave that's going to come. But it has to go in an ABC, And in an from an Elliott wave perspective, you always retrace to the previous fourth wave, and that's at $750. So
Okay.
this is just
All right.
basically a wave.
Okay, and that looks like what, June of maybe, okay. We're going to get the poll. I've got the picture now.
Yeah,
This is we're recording this. Peter's wave counts are so good, you're going to have to watch this again. Your view on crude, I believe, was pretty negative once we got into the 50 range, and I think you're also negative Canada. Is the loonie frustrating you at all?
Yeah, because it's retracing it. Yeah, this is oil. So oil is headed down eventually under $25, but we're in a triangle right now, another triangle. So here's our triangle, a great big fourth wave triangle down here at the bottom, and it is going to retrace eventually. It's got a D wave to do, $32, then it'll go back up to about $40, and then it's going to come down to 25. And the Canadian dollar, since you mentioned it, I just sent out an email to my peeps this morning on
Wow.
the dollar. Well, I know I got to find one of these charts.
Yeah.
Here. So this cleans it up a little bit. So the Canadian dollar again is in a retrace. Here's a great big third wave up. There's my big circle 3 there. Sorry,
Right.
every time I do a new resolution, these numbers move around, so I have to be careful with them. But again, this is the same principle. It'll retrace in 3 waves to the previous fourth wave. So here's the previous fourth wave at
Right.
1.19, and it's done an A wave. It's doing a B wave, and today I said, well, it looks like it's going right back down to the 1.36 here, and it's going to do test that, and then it will finally head up in its C wave. So that'll be the same at the same timing, I believe, as the final blow-off wave in the U.S. market and the dollar heading down to its 92
Okay.
cent range.
Yeah, because it sure has been holding up with overall dollar weakness across the board.
Yeah, that's right. And all of the currencies right now in the last 2 days are sort of repositioning to get into their final C waves. I mean, you can look at the Australian dollar, you can look at the pound. The pound is the odd one out, and the pound looks like it may be headed back. It has to get back up to 1.52 here eventually.
Wow. That's even more bullish than some of the numbers. We were thinking maybe 135, 140, but you're thinking 52.
62% is right
Yeah.
there.
Okay.
And then it's
Okay.
going to head down in a great big third wave. So a big C wave, because this is a again a corrective wave, an A, B, C wave. So it's got to get back up there to 152, and then.
All right. Well, I'm not going to short the pound for the next 8 months.
No, don't.
All right, buddy. Yeah,
I don't know if it's 8 months.
Huh?
I don't know if it's 8 months. It might just be 5 months. This thing might move moving pretty quickly right now, so we'll see.
So, Peter, you've given us some great looks and levels and projections here in 20 minutes, great roadmaps. I'd like to spend the last maybe 10 minutes of you talking about what you see the outcome. Some of the things that you talk about are so interesting. People talking about global warming, while Peter Temple is talking about global cooling and a possible mini ice age. And, your market stuff is great, but your long-term historical stuff and, Wheeler and all these guys that you study, it's really fascinating. So here's a little bit. I've seen this before. This is his climate and how the climate changes affect the market. And then maybe even a little bit of solar activity, which probably plays into it, is the sun becoming less active, also part of this climate shift that you see happening from a modern warm period, which is normally bullish, financial assets, to moving into a cooling period.
Okay, so that question was a 4-minute question, and you want me to cover this in 10 minutes.
Oh, no, okay. Well, you can go as long as you want,
All right, let's
go ahead.
I'm kidding, Dale. So we're just, here's a chart that goes back a couple of thousand years. So actually it goes back further than that. It goes back about 4,000 years, because here we are at 2007, if you can follow my pointer way down here, and this is a temperature chart showing temperatures going way back 5,000 years. And so you can see, and I'm a big cycles guy, you can see that these temperatures go up and down, and that it's actually been warmer, if you can look at these arrows, red arrows, previously. So here's 500-year span going back here to about, actually that's a 1,000 year. Sorry, these are 1,030 years distance here. So we've got 1,000 years going back to the year 1000, which is, they call the medieval warm period. It was very warm. You go back another 1,000 years, you get the top of Rome. That was in 0 AD. Actually about 100 AD, and then you go back to the top of Egypt. So you can see these big spikes, and if you were to look at rainfall, you would find that rainfall sort of follows these. So very nice weather or climate on the Earth creates these civilizations that have their peaks right at the top of these temperatures. So here's Egypt. You can see Greece, which got taken over by Rome, and here's the top for Rome. You can see the Mayan age right in here, where we had another 500-year peak and 1,000-year medieval warm period, which was the Viking age. And now we're at the U.S. age right now, and of course it's going to start to head down because we're at a peak. And so with each one of these peaks, this is 1,030 years, you have a great big financial collapse. You can see this, what happened with Rome. I mean, Rome, that was the peak in 0, and then it headed down over about 500 years, and then we had Trump's wall right at the bottom of it. So you have all of these interesting things that happen over and over. And if I go to these, so you get, let me just follow that up by saying the cycles are, what's the word I want, harmonic, and you can divide by 3 and get the next lower one. So 1,030, actually by 2 this time, you get to 500 years, which is a major cycle turn. Then harmonically divide by 3, you get 172 years. Each 172 years, which you're seeing spikes in here, also leads to a collapse. But when you get larger cycles on top of smaller cycles, the collapse becomes that much bigger. And in fact, we are looking at, if you were to look at the stock market from 1950 or so, you would see that we're in the largest bubble in history. And so I talk an awful lot about that, and all the bubbles collapse, so we're going to have a large collapse. The interesting thing I think about this is that when you plug in some of the things that actually happened with these, you overlay them with these temperature rises, we always have international wars on the upside as the temperature gets warmer. And of course you can look at Vietnam and Iraq and all the wars that we've had over here, and we have civil wars on the downside. I believe the U.S. is headed for a huge civil war, and it's going to be pretty devastating. And you get them on the downside of Rome. I mean, Rome started to fall apart because all of the different countries that had overtaken started to have wars within each other, and it fell apart. So you get the highs, and up at the top here I have JC1 and JC2. Well, you had Julius Caesar and you had Jesus Christ. So you tend to get these people that start religions. That was, of course, Christianity. You can go down to the next peak, the Mayan peak. It had Muhammad, and that was Islam, and Justinian, which was a whole new empire, the Byzantine Empire. You had the Norman conquest up here. So it's interesting as you follow these, and the Renaissance down at this high down here, which was a 172-year high, and the printing press, and a guy named Henry VIII, which is, I believe, Donald Trump reincarnated. And if you go to my website today, you will find that on the front page I have the story about how Henry VIII is just the same situation as Donald Trump, same kind of guy. He was a populist. He had 6 wives. Trump had 3. I mean, it just goes on and on and on. And
didn't you also make some type of even more modern parallel?
Yes.
To Hoover?
Hoover was a populist president, and if you go back to the 1920s, of course, we had lots of inflation that happened, and the dollar started to go up in value, but the Fed, which had just come into power in 1913, started to raise interest rates. Another reason, it was another reason they did that from the current one, but that, of course, created the collapse, and the collapse happened about 8 months, was it 8 months after Hoover entered office? We had the top. It was either 3 or 8, I can't remember. But he came in, and of course his problem, he was a guy who was a populist president, and he had companies all over the world and interests all over the place. But his problem was he could not communicate with the people, but he could communicate on a higher level with the people around him. Trump is the opposite in that respect. He is able to communicate with the people, but he's not able to communicate at a higher level with the people around him.
So history doesn't repeat, it rhymes.
History rhymes. And so you see these things as I go back through history, you'll see these cycle turns happening, and the same sort of people bubbling up to the surface at certain times. So it's not the people that create the history, it's really the cycles that create the opportunities and the history, and these people pop up and just fulfill that role. So it's fascinating stuff as far as I'm concerned.
Well, I don't know what cycle brought you and I together a year or so ago, but I'm thankful for that cycle because you know, besides being a very good market timer, Elliotician, your research is phenomenal, Peter. You know, I read your blog when it's sent to me on Sunday night, and I'm always, you know, want to make sure I have time before I go to work and run the live room that I could take in all your hard work and research, and you're so passionate about it that I think you're a must follow. And a must follow is at World Cycles Guy, Peter Temple, and that's also the name of your website, correct?
WorldCyclesInstitute.com, yeah.
Okay, and you are taking everything you say to heart. You don't live in a dense populated area where people are going to be a problem when some of these scenarios that you talk about begin to manifest, and you're advising people how to prepare. You're a prepper because of what you see.
Not exactly. Actually, I live close to downtown Calgary, Alberta, Canada, but I'll tell you, I can walk to water from where I am, which I think is very important, and it's mountain water that comes out of the mountains, so it's fairly fresh. I worry about people in places like Toronto and New York and Chicago, and you know where there is New York particularly, because I was just down there, and because as I walked through the streets, I thought, man, this is going to be a mess once you know transportation gets cut off, and once everything crashes, it is going to be a problem. Yeah,
so, because we have this system for stocking grocery stores and everything else. It used to be they would keep inventory, but now it's like inventory on demand. They only replace it once it's gone. So any type of interruption. I have to leave it on one more note with what's happening here geopolitically. What's your work say about what's happening with North Korea, what's happening with Russia, and what's happening with China?
Well, this gets into a bigger, I look at this from a financial perspective. I think that this revolution is going to be a financial revolution, and this goes back many years to the problem that we have with our financial system, which started in 1694 with the Bank of England creating interest, and this goes to the, I mean, you're asking me a question which is, it's got a very complicated answer to it, but it's interesting to note that there are only a few countries on earth that have not aligned themselves with the central bankers out of Europe. And of course, the central bankers in Canada is the same way. You have the Fed in the US, which is a private bank. The central bankers in Europe are a private bank. And all of the G8 countries have aligned themselves over the past, at different points over the past 100 years, with these central bankers who now create the money that these countries could create themselves, and they create it out of nothing, and they charge these countries interest rates, and that's why all these countries are going bankrupt, to use this money which they create out of nothing, which Canada used to do actually before 1974, which again goes into kind of a long story, but I look around the globe, and Russia right now is trying to create their own financial system and get away from these central bankers, and so they're vilified. Syria is one of the countries that had their own financial system. Libya had their own financial system before the U.S. blew it up. You know, there's a number of them. North Korea has got its own financial system, and they're not aligned, and so they're being vilified. Now, there's other reasons there for that, but and Iran is another one, has their own financial system.
So you're saying it's all about U.S. hegemony?
It is, yeah. It's about money, and this goes back to these central bankers. It's always about money being the root of all evil, and this is going back again. It goes back to the history, and you go back to, again, Jesus Christ, and that was throwing out the money lenders. I mean, these themes go over and over and over again at the tops of these, and they go back to Henry VIII at the top of his cycle. He was all about getting away from taxes from the Roman Catholic Church. It was all about money, and so, you know, all of these peaks at the same time, you have all these money lenders that are creating havoc and bankrupting people, and you have these major revolutions.
So Ecclesiastics, there's nothing new under the sun.
Absolutely. Yeah, it all happens over and over again. History wrong.
Thank you so much, Peter, for being with us today. And again, I encourage people to follow Peter, and you can find him. You don't do a lot on Twitter, but World Cycles Institute is the name of the website. Is that correct?
That's correct. Yeah, .com.
Right.
Dale, I have to do more on Twitter. I mean, you're a model that I have to start to follow that way, I think.
Yeah, you'll pick up followers that way, Peter. And thanks so much for sharing roadmaps. And you know, I wish you all the success for all your hard work, that you're rewarded and people appreciate you. So it was great talking to you, my trading warrior brother.
This is, I don't know that this is work.
Okay, yeah, you love it. Okay. Yeah, I know. It's so continued success with your play.
Thank you very much, and thanks for all your support, Dale. Really appreciate it.
All right, my friend. That's Peter Temple, everybody. Thank you thank Peter for coming here and sharing some great stuff. This was recorded, and you'll be able to play over his roadmap. And that's going to be a wrap up for me. I hope that everyone's had a great session here. You know, it's not a real active session. We know we got some nice targets from Peter on different instruments. 152 is even more bullish than what we heard from Blake on cable. There's going to be an opportunity to buy gold cheaper, so we could be looking for shorting opportunities, and the stock market could have legs into the fall, and the dollar's going to go down with it. So that's a wrap for me. Thank you, everyone, for your support and attention, and I'll see everyone tomorrow. Most of all, remember, don't just count your pips, count your blessings, and get prepared. You're very welcome. See everyone tomorrow.